Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering non-resident sole proprietor income and when it may be subject to California tax. We'll be covering this issue in greater detail in our upcoming webinar, California Taxation of Multi-State Businesses, on August 9th. You can see a full list of topics covered and register for the live or on-demand version at caltax.com under the Webinars tab. A hot-button issue for out-of-state sole proprietors is whether revenues from services performed in their state of residence for California customers is considered California source income subject to California tax. In the first decision by the Office of Tax Appeals that addressed this issue, which was the appeal of Larson in 2018, the OTA ruled that the taxpayer had to have some form of physical presence in California for the service revenues to be subject to tax. But that decision was non-precedential. Less than a year later, the OTA issued a conflicting precedential decision in Appeal of Bindley. In Bindley, the OTA found that a non-resident sole proprietor who performed all of his work outside of California and therefore had no physical presence in California was subject to California tax on his income from California customers. The Bindley case considered whether California could tax an Arizona resident on income he received for screenplays he wrote in Arizona and sold to two California LLCs. When the FTB received two 1099s from the LLCs showing that the taxpayer had received $40,000 from them, the FTB sent the taxpayer a request for tax return. The taxpayer responded that he didn't have a filing requirement because all of his services were performed in Arizona, so he didn't have any California source income. Interestingly, the taxpayer in Larson performed all of his services in Idaho, and the OTA held that the taxpayer did not have any California source income and was not required to file a California return. Reversing the decision in Larson, the OTA found that Bindley did perform services in California because he received income from California customers, and because he was performing services both inside and outside California, he should have apportioned his income between the two states, with the income from his California customers sourced to California. But in the Larson case, the OTA said that at least some of the work had to be performed in California in order for any of the income to be taxed by California. Since Bindley was given precedential status, any out-of-state sole proprietors who have California customers have to file a California tax return and pay tax on that income, as long as the total income they receive exceeds the non-resident filing thresholds. But just because a non-resident sole proprietor receives money from a California entity or person, the income is not automatically considered California source income. In Appeal of Wood, the OTA ruled that a sole proprietor located in Texas was not subject to California tax on income from his website design user experience services purchased by a California LLC. Because the sole proprietor services were to be used by the California LLC's customer, who was located in Canada, the OTA ruled that under California's market-based sourcing rules, the benefit of the service was actually received in Canada, not California, and therefore was not taxable by California. But Wood is not a precedential decision. However, this look-through sourcing approach was adopted by the FTB in Legal Ruling 2022-01. In the legal ruling, the FTB states, quote, "When the service provided by the taxpayer is directed at the customer's customers, the benefit received by the customer is likely located at the customer's customer's location," end quote. If the benefit of the service is not received in California, California won't tax the income from that service. So if you have a non-resident client who performs services for a California company, make sure you ask them about who the work was actually performed for. Was it for the California company or for one of the California company's customers? And if it was for the California company's customer, where was the customer located? If you determine that the services were performed for a non-California customer, make sure you keep documentation supporting this in your client's file so you have it handy when the FTB comes knocking on your client's door years later. We've also been covering Bindley and subsequent related appeals in Spidell's California tax letter. You can get full details on this monthly subscription and download a sample issue at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Spidell's California Minute.